All right, while the Dow and the S&P are higher today, they have fallen for 7 of the last 8 weeks, and your next guest says they're set to fall even further. Gary Kaltbaum is publisher of Gary Kaltbaum's Trend Watch, and he joins us now. Gary, you're one of my favorites because you're a straight shooter and you're right a lot more than you're wrong. So why so pessimistic? Why have you been so bearish?
Well, about 7 weeks ago, I started thinking the market was in trouble. And for starters, it's the financials. You look at what Goldman Sachs and Morgan Stanley and all these stocks are doing. I'm just worried that's such a harbinger. This is exactly what happened in 07 and 08 before the market came tumbling down. I think that's led to a little bit of a correction here. We're only down about 7-8%. That's the good news. I just think underneath the surface, it's a lot worse. And right now, here's the main story. Right now, the markets are sitting on very long-term support. They're bouncing off them right now into the end of quarter. I'm more worried about July. I just think the next leg is going to be down. I think that's going to invite some decent selling.
Gary, I read your predictions for the coming weeks, and I got to say, you're a lot of Dr. Doom out there about what you're predicting for the markets. Virtually every expert that we come on here says something positive about the coming earnings season that we're going to step into, but you are one of the dissenters out there. Why aren't corporate earnings going to buoy this market?
All right, first off, I'm not really Dr. Doom. Corrections happen. Even bear markets do happen. I've been thinking we're going to get something like we had last year where the major averages went down about 15 to 20%. We're kind of sort of halfway there. So if we double that, it's not the end of the world. As far as earnings, I think there's going to be some pretty good earnings reports. My issue is those are past. Market looks forward, and I am really sure that the economy stalled out about 8-12 weeks ago. I think that's going to impact earnings also, and I think guidance may not be so good. But more importantly for me, it's not just what they say and what the numbers are. I want to see how the market reacts to the numbers. That's going to be more important to me, and that's what I'm worried about here.
How much further is the market going to fall? We've seen a big correction already. How much more are you expecting prices to take a step back?
My guess was 15 to 20% off the top, just like last year. And at that point in time, I review whether we're going to go into a real bear market. I am not there just yet. I just don't think this down move here, this correction, whatever you want to call it, is, I don't think it's done just yet. I think in coming July and August, that's where my worry. This week, it's the end of quarter window dressing. Of course, that's not supposed to happen, but I think that's what's going on. Starting after July 4th, that's where the rubber's going to meet the road as far as I'm concerned.
You know, Gary, you mentioned watching the market and sort of letting the market dictate a lot to you. In your note this morning, you talked about the 200-day moving average on these key indices. It's held up pretty well. Let's say we start to bounce off of there in early July. We actually get something akin to a rally. Would that make you go back to the drawing board?
Absolutely. Look, I'm a big believer in watching support levels and resistance levels, and I'm also big on watching leadership stocks. I'll tell you the best news about today's action. I'm noticing things like Amazon starting to break out, Chipotle at new highs. I love great growth stocks and growth leaders, and if they're starting to work, I think that could be a good for the market. But for right now, I'm just thinking it's just bouncing up into new highs. I'm more worried next week. If the 200-day moving average holds, so be it. I will turn bullish as quick as went bearish 7 weeks ago. But right now, I'm still in the camp that come July, I think we're going to see some worry.
So the average person watching
the show... I hope I'm wrong, by the way.
Oh, listen, me too. But
You're playing it both ways here.
I like it better when it goes higher.
Well, I think we all do. The average person watching the show, then, what should be their strategy? How much cash should they have, and how much should they be buying on weakness right now?
Well, I'm different than most. I'll go from 100% in to 100% out pretty quickly and back if need be. I just think there should be more cash, right now in accounts right now, especially if in your areas. You shouldn't own really financials right now. Commodity stocks are still in a rough going right here. For me, again, it's the growth names that are acting well, and if they continue to, so be it. And I mentioned a few things like Green Mountain Coffee also you can add to that, and Lululemon, some of the retailers. But notwithstanding those, I just think most of the areas of the market are still in downtrends right here, and you sell any move up into resistance at this point.
All right, Gary Kaltbaum, thank you very much, man. Really appreciate your work.
My pleasure. Thank you.
All right. Thanks, Gary. Well, still ahead this hour, one special report. Our special report is coming up. The government is killing my business, a topic we're covering all week. And we're going to meet one CEO today who says his business is getting hurt.